What's up, guys? Welcome back to another video and thank you for being here. Just want to be 100% honest and completely transparent with you guys. Today I lost my personal daily loss, and I lost $200 across 4 express funded accounts, and I'll show you the trade that I took and why I took it and what my bias was for the day and all of that. So coming into the day, we had, let me go to actually the 1 minute. So coming into the day, we had news at 7:30, which is I think price index. Yeah, price index at 7:30 my time, which is 8:30 New York time. So I've marked that as a news wick right here. And we also had equal highs up there right here on the 15 minutes where it was like perfect. We had equal highs and Newsweek up there, so obviously my even if I was neutral for the day, my bias should be bullish because of those two high drawn liquidity targets. So coming into the day, market opened 8:30 right here, or 9:30 New York time. 8:30 is my time, the market open. And then I actually saw this inversion fair value gap, and I'll tell you why I did not enter it. So this inversion fair value gap right here, why did I not enter it? Because it was just kind of random, and we were not coming off of any fair value gap delivery or anything like that. We didn't really sweep a lot of liquidity, and we still had a lot of LR or low resistance liquidity run on the buy side of the curve. So I was expecting that this is the sell side of the curve. We're gonna chop around a little and then eventually go to these targets, which they are very good targets, and I was really excited to take that trade. At 8:40 here, we had a bearish fair value gap on the 1 minute here, but I've marked it to the top a little because of the 30 seconds. They had like two bearish fair value gaps. So I'll show you my execution as well, guys. Which is, they're not really that good since it's a loss, but I'm gonna show you the executions anyway. So right here I got filled at 33, 133 and 50 cents. So it's actually a little bit up uh, there. We'll call it there. Okay. So right there, so actually the price went up, um actually went up $12.50. My actual stop loss, I wanted to hit this high. Like, I marked this high to just count it, but my honest break even moment was once we hit this high, which did not honestly hit, and obviously did not hit. Why did I enter this trade? Because there was a SMT, a bullish SMT between this low and this low. So marking it on S&P here. Nasdaq took out this low while S&P did not. So that was an SMT right there. We had inversion fair value gap. I jumped in long here. This honestly should be my stop loss because the price, I'll postpone it. Can you postpone it or what? Okay, let me see. Let me just update it really quick. Doesn't take that long. So yeah. So where was I? Yeah, so this was honestly should have been my break-even moment, because the price went up more than $10, as you can see. But I just did not want to put break even because the price was kind of stalling a little, which is a honest to God should have been a true break even moment because the price is not accelerating. I did not follow my rules as usual, and the next candle, what you know, it gives me a personal daily loss. And it's frustrating, and as you can see, I tried it with 5 contracts because the stop loss was big, and I just wanted to give it a little bit more room just in case it retraces. Now, on the other side, I can say that I'm frustrated and all of that, but what is the actual reason why did I lose? Because actually, in reality, it is not a good setup. And I honestly did not look at it carefully before I entered the trade because I was sidetracked and doing other stuff on the side, and I was not following what the market is doing. But after it happened and I lost, I came back after I finished my work. I came back and I saw that, as you can see, between this high and this high, or even a little bit before that, on this high was ran. This high was ran. So let me show you guys. Um, so this high right here, right? And this is the same high on in Q. This high was ran on SMT, so therefore we had a bearish SMT. So while we're having a bearish SMT, this bullish SMT appears. I honestly did not see this bearish SMT. I marked it after I lost the trade because I recognized what was wrong, and it was not a good setup. We had a bearish SMT, the market was dumping, and when we have two SMTs, I should not enter any trade. But yeah, it's my fault at the end of the day. I did not watch the market carefully. I didn't know what it was doing, and it's fine. I paid the price, but now let me show you where is the better trade. The better trade is this one right here. So this one right here, and you would have been targeting this high inside of the fair value gap, and this is not a hindsight, guys. I will show you why this is the better trade. Okay, so right here you had fair value gap got inversed or inverted, giving you an IFG. We break it, you enter here or on the retest, whichever strategy you like to do. I sometimes it does not do the retest. That's why I enter on the candle close. Now, what is happening here that is making this setup is better than this and actually worked? Well, right here, you are, let me see. So right here, starting from here to here, from, okay, sorry. Starting from 850 to 910. What is that? In another word, in the New York time, 850 is 950 and 910 is 1010. What is that timing? Perfect. That is a macro timing. What happens in the macro timing? We run liquidity. The price aggressively goes through or to targets. Okay, what else is happening here? We had an inversion fair value gap, so we had the setup. What is another confluence that would give us a higher probability of that setup? Look here, between this low and this low. Why is this an SMT? This is a beautiful SMT and one of the best SMTs that I like. Why? If you answer why, then you are a better trader, or you saw this a lot from screen time and is giving you a lot of conviction of your answer, or that your belief of taking this setup more than this setup. Now, this is a better SMT because S&P took out this low. Why is S&P taking out the low or making the SMT high probability? Because look at S&P. It costs, or it's priced at 5,400, or let's say 5,500, right? Look at Nasdaq. It's priced at 20k, or almost to 20k. What does that tell you? That tell you that S&P is the weaker pair. It's the small pair, right? So when it makes something significant like this, where this is the low of Nasdaq, and then S&P makes another sweeps that low. This is huge, and it's also inside of what, macro timing, so it's more relevant. It gives you a better SMT of the weaker pair taking out this low. It makes it more relevant, and it's more high probability because it's inside of a macro timing. Versus if Nasdaq is the one to make the SMT, it won't be a high probability because Nasdaq always, because it's the strongest pair, it always a high volatility. But when S&P makes the SMT, we can talk about it. You know, there's something coming, and this is what is happening. I was not around the chart when this happened. I was doing meetings and stuff from my 9 to 5 job, and this is what I came to, and I completely understand. I see what is going on. Look at this. It's SMT inside of what? Fair value gap. Giving the retracement to it, we had bearish fair value gaps, got inversed. If you don't want to take it blindly, which I do not recommend, do not take fair value gaps blindly, guys. Wait for the bearish fair value gaps to break and take the inversion fair value gaps that's more high probability, and you take it to maybe this high, $45 take profit, or $46 take profit. Take it to these relative highs, which is 36. But this is more likely to go up here. Why? Because the draw on liquidity is higher, and the price today happened to chop around before going to this target, which is fine. But if you are taking, you should be like, if your target, let me tell you something. So if you are targeting this right off the bat, that is fine, but you need to take partials on key levels, where whenever we take out key levels like these relative highs, or this high, or this high, why are these important levels to take profit at or partials at? These are relative highs. They're good level to take partial at, and this is an important high because it's inside of a bearish fair value gap, so it is more probability the price will go up here to this high. So it's a key important level to take partial at. And same thing with this one, with this bearish fair value gap, retesting it. So this high inside of the bearish fair value gap is more high probability that the price goes to. Of course, these equal highs are very good target as well, but the price did not make it all in one shot, which is fine. So you would still have gotten some profit. So yeah, this should have been the better trade, and I explained why. I hope you guys find the helpful information out of what I said. And I'm not trying to make it any fancy or any complicated. I'm trying to explain it however I understand it, and hopefully it's easy enough for you guys to understand it as well. But so this is my loss, and this would have been the better trade if I would have, of course, waited. But my life is busy and I got work and stuff, and I don't mind taking the loss. That's fine. I'm pretty sure I will recover it later down the road. But the better thing and the good thing is maybe teach, like the teaching moments, and giving you guys like advice, and maybe guide you into which setups you should have been taking and which setups are bad, explaining why the setup worked and why the other one failed. These are all very helpful information that you guys should be taking value out of. When I was at the very early stage of trading, I was wishing that I can find informations like these, knowledge that I have right now, although I'm not that profitable yet. But these are all in like very helpful and very useful information, and it depends on how you apply it. Sometimes I don't apply it correctly, that's why it costs me to lose a lot. But maybe someone else would find these information more helpful and will be more better to apply it than me. So that is why I'm making these videos, to help you guys and guide you and giving you useful information that helps you with your own journey. That is all for today's video, guys. Thank you all so much for watching, and I will see you in the next one. Peace.